Hello everybody, it's Tortoise Investing coming at you today with two dividend ETFs that you can buy and hold forever. I know the market is down a little bit over the last month. There's been a lot of red, but you know what? That just presents buying opportunities. Stick with me here. If you're new, please hit that subscribe button. Please hit the like button. Comment down below if you're buying any of these or what you're looking at. I'd love to hear from you, and I appreciate any and all support. None of this is financial advice. Always do your own research. Now, we'll take a look at my portfolio real quick before we dive into the ETFs. We're going to be taking a look at SCHD and DGRO. Both of them are down a little bit over the last month. So we will see what makes them tick. So this is the portfolio. Again, I will never hide this from you. I will be as transparent as possible. When I'm up, when I'm down, when I'm all around, I will never hide this from you. So, yep, that's what we're looking at. Again, I'm just looking to DCA and everything as I'm getting paid going forward. But, yeah, SCHD over the last month, let's see, around September, it looks like it was at 74, down a little over 5% as of right now. And take a look at DGRO, July 26th, looks like it was its last high, down about 7%, below $50 for that. And it looks like SCHD is just a little over 70. Now, the thing that I like about both of these is the dividend growth. SCHD over the last 10 years been increasing its dividend right at 11% for an ETF. That is crazy, especially when it's got a dividend yield over 3%. This is awesome. This is the reason that SCHD is the core holding in my portfolio, and then I got my individual holdings around it as the satellite positions. Now, excuse me, DGRO has also been increasing its dividend pretty well. Very nice up and to the right trend here over the last 5 years at a rate of 11.22%. So again, very nice. What makes them tick? So we'll take a look here. SCHD, Schwab US Dividend ETF. It's got an expense ratio of 0.06, so not too much. And this is a look at the holdings. We got Amgen at 4.5%, AbbVie 4.23%, Chevron 4.1%, Broadcom 4%, Merck 4%, Pfizer at 3.9%, so basically 4%, Cisco, Verizon, Texas Instruments, Pepsi, UPS, Home Depot, Coke, ADP, Lockheed Martin, BlackRock, Altria, Blackstone. I know most of these. They don't just hold something to be holding it. There's usually a reason behind it, unless it's Ford. I hate that position. I don't know why that's in there. But for the most part, a very strong top 10. And, I mean, there's a reason why I'm holding this. There's most of these companies I love. I'm not a fan of Chevron. I don't like energy. It's too volatile. My personal opinion, I think Verizon's a meh. But out of their top 10, those are the two that I would change. But I mean, even then, you got Amgen and AbbVie, which are big names. Broadcom's crazy good. Merck, Pfizer, Texas Instrument, Pepsi, UPS, all these, Home Depot, big names. They hold great companies, and again, that's why I love SCHD so much, and it has performed very, very well over the last 10 years. Now, DGRO's holdings. It's got an expense ratio of 0.06, so pretty cheap, right there in line with SCHD's 0.07. So we'll take a look at the holdings here. Their top position is Microsoft at 3%, JP Morgan at 2.9%, Apple 2.9%, Johnson Johnson 2.8%, Exxon 2.8%, AbbVie 2.6%, Chevron 2.6%, Pfizer 2.2%, Procter & Gamble 2.1%, and United Healthcare Group at 1.9%. So again, a very strong list of holdings. Both of these have done very well over the long run. Take a look here at the 5-year. At one point, before all the chaos in the world has started happening, this was at $81. So you were up like 61% on your money. Pretty good over around a 4-year period? Not even 4 years. That's pretty good. Pretty good. Of course, we've been dealing with the inflation and all just the craziness in the market, but I've just been taking it as an advantage to an opportunity to just accumulate shares in all these holdings. Like, there's a lot of things right now that are just trading sideways, not even just ETFs. MasterCard's one of them, been trading sideways for a while now. Over 5 years, take a look at DGRO's peak around January 7th, 57.39% over less than 4-year period. So again, pretty great. Of course, you've got the crazy COVID streak in here. If I can get the bottom of it. Yeah, this is nuts. But still, in a bull market, both of these performed very, very well. They both pay a really, really nice dividend. I think DGRO's is, does it show a percentage here? If I can find a percentage, is a little over 2%. I am trying to find that, but it's still a great holding. Overview, maybe? Boop. You gonna show me the dividend yield? No, not going to show me dividend yield. But yeah, 2 dividend ETFs that you can buy and hold forever. Like I said, both of those have very strong holdings and performed very well the last bull cycle. So maybe something you want to do your own research in. Might be something you want to pick up. I don't know. Not financial advice again. But hope you enjoyed that. Like and subscribe for more. And until next time, see yous.